A very good evening, my dear viewers. I welcome you again to this episode. Again, my name is Deo Bahemuka. Today, I want us to talk about how taxes affect small and medium-sized enterprises. In our last video, we talked about registration, how it's a challenge to small and medium-sized enterprises. Today, I just want us to continue with taxation. Do you know that many businesses outside there, most of them, when you talk about taxation, when you talk about taxes, most of them, they just think of hiding. They just think of running out of business. Perhaps most of them have not understood the concept of taxation. Like I said, SMEs, call them small and medium-sized enterprises. In our country, Uganda, for instance, they pay taxes depending on the turnover they make in a year. I remember saying that SMEs make their revenues is categorized between 10 million Ugandan shillings to 150 million Ugandan shillings. So meaning that a business that earns less than 10 million in a year or makes sales less than 10 million in a year, you're not supposed to pay taxes in that case. So this evening, I just want to walk you through to understand how much are you supposed to be paying as an SME. You are earning 15 million, you are earning 30 million, you are earning 20, you are earning 100, you are earning 140. How much are you supposed to be paying? But one thing you must understand also, you must be aware of, is that when you have records, that's when you stand a great chance for you to pay the exact taxes. But when you don't have records, you end up paying higher rates or higher taxes. When you check out on the URA portal or website, you realize that SMEs pay taxes according to a given schedule. Okay? A schedule for SMEs, how they are supposed to be charged taxes. And remember, the taxes paid by SMEs are final taxes. In other words, they are presumptive taxes. And two, these taxes are not, they are final. In other words, they are final, and you cannot use them to request for tax credits. So now I just want to walk you through that table. Okay, the table has categories. Those categories range from 0 to 10 million. They pay no taxes. In other words, if you find that your income or your sales in a year, they are less than 10 million, you are paying new taxes, whether you have records or without records. Then someone who earns 10 million to 30 million, then this person pays 0.4%, okay, of their annual sales or their annual turnover in excess of the 10 million. When I say in excess of the 10 million, I mean if you are getting 20 million, for instance, as your sales in a year, you are going to get 20 million minus 10 million. The balance which remains, you multiply by 0.4%, and what you get is the tax you're supposed to pay. But if you are in that category and you have no records, then you end up paying 80,000. Take for instance, if someone is earning 20 million, okay, so you'll get your 20 million minus the 10 million, okay, multiply by 0.4%, and that will give you 40,000. So meaning you'll be paying 40,000 instead of 80,000, which is fixed in that case. So it means if you have no records, someone of 15 million, of 20 million, of 25 million, you'll be all paying the same tax of 80. That's the second category. Then the third category in that schedule is someone who earns or who makes sales between 30 million to 50 million Ugandan shillings. So in that case, that person will be paying a tax of 80,000, okay, plus 0.5% of the total sales in excess of 30 millions. For instance, someone is earning 40 million. You're going to get your 40 million, okay, minus the 30 million times 0.5%, then plus 80,000. And in that case, you'll find someone will be paying around 130. But if someone has no records, you'll be paying a fixed figure of 200,000 Ugandan shillings. So you find when you have records, you tend to pay at a lower rate than someone without records. Then the other category is a category of 50 to 80 million. If someone earns between 50 to 80 million, then that person will be paying 180,000 plus 0.6% of the total annual sales in excess of what? In excess of 50 million. For instance, if someone is earning, for instance, 60 million, you will get your 60 million minus 50 million times 0.6% plus 180, and you'll find that person is paying around 240,000 vis-a-vis someone without records paying 400,000. The other category is a category of between 80 million to 150 million. That person will be paying 360 plus 0.7% of an amount in excess of 80 million. Are you getting it? In annual sales. So meaning that if someone maybe is making sales of 100 million per year, you'll get 100 million minus 80 million times 0.7% plus 360. That will be around 500,000. Someone who has records, vis-a-vis someone without records who will be required to pay 900,000. So bottom line, when you have records, you stand a better chance. When you have records, you stand in a better what? In a better chance, and you are better off. Some key points to understand that there are some people who are in the who are doing professional businesses, like people doing accountancy work, like people doing medicine, like people doing architectural practices. For you, even if your incomes are less than 150 million, you are not charged according to this schedule. For you, you will be charged as per income what? Income tax. So we must be aware of that. So this one is basically for non-professional what? Service, non-professional businesses. So we must be aware of that. So in my next video, I will have to talk more about records. I want us to understand how records are a challenge to small and medium-sized enterprises. So let's be aware of that and wait for that video. But one thing I request you is to share, is to comment, and to subscribe to the channel for you to enjoy such knowledge to help you succeed in your businesses as an SME in this land of Uganda. Have a blessed evening. See you in the next video. Bye-bye.